Hey, everybody. Welcome back. Hope you're having a great day. And of course, thank you so much for taking the time to join me on this trade recap. OCTO went 5,000% today at one point. Ridiculous. From our ads, from our entry model, 2,000%. Absolutely crazy. Nothing I could have ever expected. It's nothing we really get. I didn't capture this full move. I was scaling out along the way and sold my runners far too early, but we're still going to break it down. That's the truth of it. Not looking to sugarcoat it here. It's about consistency here on this channel, and scaling out is a part of it. But our entry model, that's going to be what we're discussing first and foremost is, well, it's here. And let me grab my notes for the day as well. I think those are over here. This is an AMD pattern, something that we've talked about on the channel a couple times now. Well, first we have our news pop, our catalyst. They're announcing a 250 million private placement with an additional 20 million strategic investment from BMNR, another company who had a crypto treasury that went absolutely zonkers, parabolic, and everybody's like, oh, next BMR here. It actually was, which is the crazy thing. So that's pretty cool. And then, it is with Worldcoin, right? Which is Sam Altman, ChatGPT, which is a little weird, but I guess better than, a Dogecoin or something, apparently. So, they talk about, universal income, and I guess this is what they meant. So we get the news pop, which is aggressive. Kind of VWAP breakdown, reclaim, consolidation, then some expansion into just a prolonged period of consolidation or accumulation, just flirting with the VWAP, right? Flirting with the VWAP, a little up, a little down, at which point we have our manipulation leg breaking that accumulation. So whenever there's a prolonged period of accumulation, if you're going long, your stop loss is going to be below the accumulation. If you're going short, your stop loss is going to be above the accumulation. So you're going in the middle, your short position, so your stop loss is here. You're looking to short the stock down, right? Other way around, your long position, you're going long at the same spot, whatever. Your stop is below the accumulation, and you're going long this way, right? So the market maker takes advantage of this clustered liquidity, and they swing down a manipulation leg, which is going to stop people out, right? And then they run it. So everyone who would have been right on their bias here gets kicked out of the trade just before the run happens. And it is dirt nasty, but it's the reality of things. And you don't necessarily know which way it's going to go. You do get a bit of a heads up if you have a catalyst, right? To layer in with the pattern, increasing your conviction. So we have our accumulation, then we manipulate down, and we distribute up. And this just went on and on and on. So our entry model off of that is basically just, when we get back. Oops, I kind of messed this bar up here. When we get back into things, magnet off. So annoying sometimes. Anyways, yeah, so really you can take entry the moment you break the upper band off of the manipulation, right? And then our stop loss, so this consolidation here, 3 minutes of nice entry. Even you could have got this extra 2 minutes here. 6 minutes of easy entry that is so good off of this market structure shift, right? So you're not only breaking your accumulation, but you have a market structure shift, a change in state of delivery to take your entry, right? And then your stop loss goes below your manipulation. Now, if you're not familiar, this is our risk reward tool. Now, you can go into your settings, set your account size, set your risk. I like to play with 3% of the account. And now that tells you how many shares you can buy, right? I know how many shares I can get here based on my stop loss. You see how it changes? And the wider stop loss I have, the less shares I can get, right? Because it's based off of a risk of my account, which is 3%. In that current, you can do less. I recommend you do maybe start with 1 or something. Build your way up once you're comfortable with your entry models. So that's our entry. That's our stop loss. And then we're scalping up. We get our 1-to-1 risk reward, our 2-to-1, our 3-to-1, our 4-to-1. And then our bazinga, just what was this even? A 42.2 to 1 risk reward, going 2,100% off of our ad in the morning, which is crazy. Of course, we scaled out and we're out of this trade almost entirely by $8. We're closing out the last of our runners, and it just went and went. So we watch in awe of this, but it's not something that happens all the time, right? I would love to say, oh, I held my full position till the very top and I'm a kabillionaire today. Ta-da, I'll never see you guys again. But, the reality of things is you protect yourself, you reduce risk along the way, and take some of those profits. However, we could talk about some additional entry models here because they existed. So we have a gap up in the... I'm just going to get rid of this. We have this gap up in the morning, right? And we can play gap fill strategy, right? So we want to take entries in the gap with a stop loss below. But you can see this wick potentially, and we want to see a wick open and close below, right? So, maybe you persevere. I don't know if you're scalping these, taking profits at all. Maybe you do, because that would be within your parameters. Like if you're taking, this with your stop loss below and you're looking for the wick to open and close, your 1-to-1 is down here. And then there's this wick here, opening and closing. There's this one as well. So those could be potential exits, but that's so tight and choppy, right? Maybe you're getting kicked out, bad entry, you get nervous and leave early. This candle is super scary, right? Specifically these two, this one kind of wicks in, but opening below, closing below the gap, right? We don't like that. And as soon as we do that, the gap fill is basically invalidated, right? And we want to wait until we close above, which is pretty brutal because now the model changes and we're no longer entering in the gap, we're entering above the gap with a stop still below. And then this is like potential false entries as well because again, you're going to maybe get stopped out here. Like you're entering once you're clearing above the gap, and then your stop loss is going to go below the low, right, where you just were. So this potentially would have played out if you could have persevered this wick, right? And then you get it. However, maybe it's safer. Well, it's not safe because that's your entry, and you take your entry based off the signal, right? So that's it. If you didn't get that, if you were slow, you could have waited until you cleared the gap here as well. These candles opening and closing above the gap that we created is what we're looking for. And then that stop loss just below your local lows. Scalp it up again. We see that again, right? Where we get this gap, then we break through it, we retrace through it, and then take your entry, above the gap. Even this candle or any of these consolidation candles, your stop loss below, and you get a secondary scalp up, right? Like, this would have been pretty deep. And say you get a bad entry or like mediocre entry, even you could use the wick or the body. Let's see how that works out. So this would have paid. That's our 1-to-1 off the body of the candle. The wick, not quite. Really, really close. But that's the thing too, is like you're already playing something that's up 3,000% on the day. You got to be careful. You got to keep it tight. But those are some additional entry models that you could have played. And then furthermore, a potential secondary entry here, just really good scalps all day off of the gap entries. It tapped it a couple times. And well, it's like, 56 to 63, 56 to 65. High risk scalps. And then eventually we break down, and that's going to be the end of it. So it's, nothing I like to play, but sometimes you get these entry models on a run. Like this is up 4,000% on the day. Yes, there's an entry model, but because it's up so high, I don't want to play it. If it was up 15% of the, and it just gapped up in the morning, there's your gap fill strategy. Maybe you're up 20, 30%, 100, 200%. It's not 4,000%, So, still looking at the setups to learn from them. You don't get them every day, so always trying to accumulate data, right? How did this setup play out? How would I have played it in real time? And would that have worked out or not, right? So again, that's the gap fill strategy, but wouldn't have played it because we were already up so high when our entries this morning, were down at 380, 370, off of this pattern, which we're comfortable with, a pattern we've played lots on the channel. We've talked about, we have a dedicated video to it, for crying out loud. So that was the big play today. And that was it. I wasn't watching anything else. I was just, eyes glued on this all day. We did have some other stuff. Our was a day 2 continuation from yesterday, right? We were kind of looking at this yesterday, had its after hours and pre-market, then market open. Closed pretty strong. Had some volume on open, right? Again, which is pretty decent. So we'll see how this folds out. Maybe it's a multi-day run and can kind of go here for a week or two. XAIR was also kind of watching in the morning. And this was competing with OCTO, right? Which I think is a big reason it didn't really perform well. Not great. I think this might have been a Chinese stock as well. No, New York. But pretty decent. Did this have news? I don't even know. Let's check quickly. Beyond Air. Exercise of warrants. Oh, that's why it dumped. 11 hours ago. Oh, yes. Okay. So this is what's going on here. Whoops. Brain cancer. Yeah, so cancer, Alzheimer's, autoimmune diseases. And then if you compare that with a micro or like a small market cap, sub 50 million is ideal for me, you're going to be golden. And specifically if that low market cap has a low daily average. So let's check it out. Our 30-day average volume here is 6 million. Our current day is 20 million because of the catalyst. And the ratio is what provides us with price improvement, right? That relative volume is what drives price expansion most of the time in my years of experience trading small caps. So that's all I have for you guys today. Nothing much, there's a ton of China pumps, and it's like I'm not playing China pumps. I'm not playing penny stock pumps with you guys. I get it. You made a lot of money today, but sometimes the best thing to do is to sit on your hands, specifically in the summer when volume is pulled back. We are getting into the fall now, seeing things come back. SPY, just refuses to die. It's like if I'm not at all-time highs, I'm going to consolidate towards all-time highs. So we'll see what tomorrow's green bar brings there. GameStop earnings tomorrow. We've got a dedicated video for that. Check it out. Give me a like, give me a comment, subscribe to the channel for more trading content. And thank you all so much for watching. And I'll see you soon in the next.